Hello, it's Monday the 11th. I'm FxPlew and I forgot to charge the air wheel over the weekend, so I'm on foot for this morning's market brief. So we've got the August employment report due out tomorrow for the UK. Forecasts suggest the claimant count should have increased marginally and that earnings will exceed inflation. Inflation is expected to be higher due to the rising cost of oil that's being reflected on the forecourts, but we should still be well on the way towards Sunak's goal of halving inflation by year end. All this rather supports the view that we'll have another 25 basis point rate hike at the next MPC meeting, but the key question is whether that could be the last hike in the current rate tightening cycle. That very much remains to be seen. Over in the US, inflation data for August is due out on Wednesday this week. The headline number is likely to be higher, and like the UK, this will be down to the higher gasoline prices. But this just helps underline Powell's point of view that the path of inflation down towards their 2% target is not going to be linear. There are still those who believe that a recession is coming, but while employment data has been cooling over the past few months, new jobs still remain strong. As such, most of the Wall Street banks are coming around to the idea that a soft landing is very much achievable. Go on the Fed. In the markets, all this serves to support the dollar. The dollar index is enjoying its longest winning streak for about 9 years, I think. Last week was the 8th consecutive week of gains. Get on the gain train. And we closed around 105.05 for the dollar index. Meanwhile, sterling has come under a bit of pressure, and last week we fell to 124.45 against the dollar. We kick off the new week from around 125.15 against the dollar. We're 116.65 against the euro, and euro dollar is around 107.35 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.